Welcome back to Switzer. Helen Dally in the chair for Peter Switzer tonight. Well, turning to markets now, Lance Lai from Accountancy Invest joins me live in the studio for an update on all the action around the world. Lance Lai, good to see you. Thanks for joining us.
How are you, Helen?
I'm very well, thank you.
Great.
Now, I want to talk to you about the US S&P 500 because it's really been on a run, but I want to take you back to what you said to Peter the last time you were on. Let's have a listen.
We're smack bang on the target, Peter. We have to expect a pullback of some sort now. I don't expect a massive pullback. I think something like 2,418, which is that little S line, which you can't see because I've got a bit of detail happening there, but it's about a 2.1% pullback. I think it'll be healthy.
Now, in all that, you said it would pull back to a little bit, would pull back a little bit to 2,418.
Correct.
Now, the market has run on, so were you right or wrong, Lance?
So the bigger picture, Helen, was that I thought that it needed to go higher, but it had already gone up so much already. It needed to have a bit of a pause. And indeed, you know, call it luck, call it the charts and the magic that are in charts. I called it that in that conversation with Peter last time, that would go back to 2,417, which would have been a 2.1% fall. And in fact, it went there. So call it what it will, the charts worked on that occasion. All right, and then where has it gone since then? So last night, in fact, was the highest it's been you know, in recent times, and it was 2,511. I think
it's extraordinary.
It is really, isn't it, Helen? It's I call this market at the moment, and it looks like on the charts, because it's already gone up such a fair way. It looks like it can go further, but I call it a reluctance, a reluctance increase. We've actually broken into what I would consider as new territory. And the new territory, as you can see there, T represented a target that I had.
Okay, that T sort of up in the top kind of right
Correct.
Corner, yeah.
That T actually was a target that I had in the earlier shows. It's actually borne out, hit there.
Yep.
And then when I came on the show, it was really coincidental, but it was actually on the target when I came on last time, and you can see here it's hit the S numbers.
Yeah. All right. Now I want to move on,
yes,
Lance, because the ASX 200, we have been stuck in a range.
Yes.
Let's have a look at your chart there. How do you see this, the ASX 200?
So you can see on the far bottom left, in February 2016, it was 4760.
Yep, so and it's what, a year and a half ago, yep.
Exactly, and it's done actually reasonably nicely till April of 2017. You can see that we have a top there.
Yep.
That T1 line was a target of 5996. We didn't quite get there. We got to 5956 on that April top. And really, in that time frame of 14 months, having gone up 25% is a decent run already, Helen. And what you can see there now is, as you said, we're stuck in this range. We're currently at 5670. I thought last time that we had a chance of going up because we were holding that sweeping yellow line, the 200-day moving average. We've since broken through that, and I think at the moment where we're going to go is we're going to tread water down a bit further, but we're going to be range bound between that T1 level and that T3 level on the charts, Helen.
All right, now let's move on to the Shanghai Composite, because this is an interesting one. Obviously, China's one of our more interesting, well, certainly trading partners, if not the market being as of much interest. But it did have a top, in sort of mid-2015?
Correct.
Is that where that top is there?
That's exactly right.
And then look where it's travelled. It's just plummeted.
Yes.
Now, what are you making of this?
Well, so on the far left, you can see, you're right, it was in June 2015. It was 5178. And there on the bottom, it was January 2016. It'd fallen a whopping 49% in 8 months.
Yeah.
And in that time frame, basically all the speculation has come out of the market. It's gone back into normal, if you would like, or more evolved trading. In that time from B until now, it's gone up a nice 26%, and it's a steady as she goes situation. The reason why that chart is of interest, Helen, is that there's a 200-day moving average, and we've been sitting above that, and I think that, Peter always asks, is there a risk? And I can certainly see that whilst this market has stabilised and it's treading nicely in a sideways action, we don't want it to be too volatile. If that 200-day moving average breaks, and I do expect it to break, the trading to fall below that, which is only 4% away, depending on how hard it falls, that could basically give some warning bells.
All right. Lance Lai from Accountancy Invest, thank you so much for joining us. We've run out of time, but a great pleasure to talk to you.
Thanks, Helen.
Well, that's it for the show this evening. If you want to read Peter's thoughts each morning at the close of Wall Street, check out the website switzer.com.au, or you can visit switzersuperreport.com.au. If you've got any questions or ones that you'd like Peter to put to an expert, email switzer@switzer.com.au or follow him on Twitter. The handle is @Peter Switzer. I'm Helen Daly. Thank you so much for watching. See you soon.